Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. It is February 8th. Hope you guys having a great day so far. I guess we're feeling pretty good for upcoming weekend, right? Hey, quiet day today. There's nothing on the economic calendar today. Next week, however, will be a little bit better than this week. We'll have a lot, pretty much every day has some economic data to be represented that day, or at least be released. And so it'll be a little bit busier, probably a little more volatility. This week we've been taking our cues mostly from the Q4 earnings reports as well as any geopolitical stuff. And today's really no better. Right now the stock market is down quite a bit again. We're getting Q4 earnings reports, but they're kind of winding down a little bit right now. Of course, big one right now today is U.S.-China trade talks. They still got a little bit of afterburner of the EU, the poor reports that came in with the poor German manufacturing numbers came in, but there's been reports that I guess the U.S. is taking a lot more of a stance in their negotiations in base. I guess there's a report that maybe Trump has no plans as of yet to meet with President of China before the March 1st deadline. So now that's kind of creating a pessimistic mood towards anything getting done prior to that March 1st deadline where the tariffs are placed. Now, there's also some reports that CNBC, I think it is, that released that that the U.S. will leave it at 10% tariffs versus the 25% tariffs. Nothing's been announced yet, but just little things here and there are slipping through. They're still saying, they're Kudlow basically had mentioned that we're still far apart on a lot of areas, especially on the enforcement of a lot of these things. And so we'll have to just kind of wait and see if anything develops here soon. But right now, that's kind of where investors are kind of looking towards. Now that we're kind of drying up on the earnings reports, they're going to be kind of focusing back onto this. And of course, the other geopolitical item that will be coming into view would be the Brexit as well. So be prepared to watch for that as well. We're not hearing a whole lot about it now, but you're going to probably start hearing about it once the March 1st deadline comes in, and I think they're due in March as well. So let's see how this is playing out in the bond market. Sorry about that, I went a little too far. We are up a little bit. We're up about 5 basis points. We're still climbing this middle range here, kind of slowly climbing up a little bit away from the 25-day moving average, which is helping out bonds here. Not quite enough for improvement in pricing, but it's kind of stepping up. So maybe if we get another step like this on Monday, it might give us that extra boost for better pricing on Monday. But we're kind of in that middle range where it's an improvement, but not enough really to see any difference in our pricing here. All right, so and here's the Treasuries. Treasuries, a good thing for us is that it's declining here a little bit further. It's almost to the this Fibonacci level, about the 2.62 level here, and it looks like it could touch off that, and even maybe further down to hit, maybe test this 257 second level here of Fibonacci, like we did back in December, January here. Right now it's kind of this decline here. If you look at the trend line, it's on a declining level here. And if it continues, obviously that bodes well for mortgage-backed securities or interest rates. That helps us out. So that's the good news. That's pretty much it. If anything else changes, I will post on Twitter at Mike Bjork, so you can follow me there if you want to see any of these any updates, if you want to keep up to date with everything. Otherwise, you guys have a great rest of your day. Enjoy your weekend, and we'll see you guys on Monday. Thanks for watching. Bye-bye.